Chris Jorstead with thebestarizonahome.com, and I'm here with Mr. Greg Siderakis with Pinnacle Lending, and we are going to talk about FHA loans today. Greg, how you doing?
Good. How are you doing, Chris?
Doing well. So FHA loans, I know awesome loans, and first time, or I guess you tell me, what is an FHA loan?
FHA loan is a loan backed by the Federal Housing Administration. It's a great loan for people first starting to get into a house. They have relaxed guidelines for lower income. They have relaxed guidelines for lower credit scores. But in general, they're just a great loan all the way around. One reason for that being is that they offer 3.5% down for a down payment to get into a FHA loan, which is one that is not offered by every type of loan. It's one that it's probably one of the most common ones that you're going to see in the market. It's going to be primarily FHA and conventional for the most part, right?
Mm-hmm. Well, a lot of times I see FHA and then we'll almost try to push it into a conventional loan because from what I understand, there's some restrictions on FHA.
Right. So yeah, there are some restrictions on FHA loans and some things that come along with them that maybe some people down the road want to switch over to conventional with. One of those things is being mortgage insurance. So when you get an FHA loan, there is an upfront mortgage insurance premium that does need to be paid. And along with that is mortgage insurance that you pay monthly with your mortgage payments.
Okay, so it can cost you a little more, although it saves you quite a bit up front. It can save you. It may cost you a little bit more with mortgage insurance monthly plus the premium. And also, from my understanding, the appraisal is a little bit more strict.
Right. So the appraisal on an FHA loan is going to be more strict than, per se, a conventional loan. FHA loans, they go through every aspect of it because it is the government funding the money from it, rather than with a conventional loan, it's not backed by the government necessarily. They go through every aspect of the home. They're going to be a little bit more strict of, is everything perfect with this house in comparison to conventional? Everything is still great on the house, but maybe there's like a spot on the wall that's not exactly perfect.
Right. Okay, I gotcha. So another question is, I've heard of down payment assistance. Is that just for FHA loans? Is that for really any loan, or where does that come from?
There are a couple different forms of down payment assistance. With the FHA loan, there is something called the Chenoa Fund. So there's a down payment assistance with the Chenoa Fund that can cover that 3.5% down as well as the closing costs. So that Chenoa Fund is an awesome thing that we can offer our clients. But in a hot market, it is a little bit more tough to get your offer accepted with the down payment assistance.
So is that only with the FHA, or that there's other loans that are qualified?
So there are other loans that qualify for a down payment assistance. Conventional loans, there is the Home Ready program for first-time home buyers. Generally, you need 5% down on conventional, which is one reason people usually push for an FHA loan, so they don't have to put quite as much down. But if you have good credit and everything, just a little bit lower down payment, you can qualify for a conventional loan with the Home Ready program and have 3% down instead.
So an FHA loan is good for potentially lower credit?
Yes, potentially. Conventional loans are going to be a little bit more strict with your interest rate if you have a lower credit score, or getting the loan in general. They don't work with quite as high of a income threshold of debt.
Right, and that's DTI, right?
DTI, yes.
Debt to income ratio. And that's calculated by?
So DTI is calculated by all of your debts combined with the proposed mortgage that you're applying for in proportion to your income. So, let's say you make $5,000 a month, right? And all of your debts combined add up to $2,000 a month. That is going to be, within our income threshold, and you will still qualify within that. Generally, conventional will let you go right up to 50% of your income threshold. So if all of your monthly payments are $2,500, that's where we get kind of iffy on if you're going to qualify or not. And of course, if you're up at $3,000 of your $5,000 a month spent in debts, then you're probably not going to qualify with conventional.
All right, well, so FHA definitely has its benefits, but also
Absolutely.
possibly some drawbacks. So something we want to take into consideration.
Yep, exactly. Every loan has its ups and downs, and I help you decide which one's going to be best for you financially.
Of course, first step is to pre-qualify.
Get pre-qualified.
And make sure that Greg has the time to identify what loan is going to work best for you based on your financial goals, right?
Right, exactly.
Awesome. Greg, thanks so much.
All right, thank you, Chris.
And I'm Chris Jorsted with thebestarizonahome.com. Be sure to check out all the rest of our videos and get more information on the different types of loans out there and how to qualify.